My beautiful people, welcome back. And boy, do we have a lot of awesome topics to cover today. We're talking about inflation's next stage. And we're going to do this by analyzing the food shortage crisis. So today's topic is going to be specifically important if you want to understand the peak inflation narrative, if you want to understand whether the market has bottomed, whether the Fed is going to get less hawkish. This video is going to be perfect in helping you assess where inflation is going. And at the end of the video, I've got a lot of really cool recaps to discuss in terms of what we've been doing inside our community. And objectively speaking, I believe that my community is very, very happy with the guidance that I've been providing. And we'll talk about that in a moment. Now, the sponsor of this video is FTX US, so I want to take a moment to thank them, and we'll discuss what they've been up to in just a couple minutes. So with that said, let's get straight into the video. Now, I've got a chart for you here, and we're going to get straight into it. This chart is going to add a lot of value to your knowledge, to your understanding of inflation, because when you read the news and you read the media, we see headline inflation, we see headline CPI, but most people don't know what makes up the components of CPI in terms of weight. And we can see from this chart here that shelter, food, and energy make up over 50% of the CPI reading. So today we're going to be focusing on the food aspect, the food crisis that has been emerging, this food shortage situation that a lot of countries around the world are experiencing, and a phenomenon that might come to the US in the foreseeable future. This portion plays 14% of CPI, and that is our exclusive focus today, understanding food's contribution to CPI and where it's going next. As you can see here from my Y charts dashboard, that inflation in the US headline is at 8.6%, and the Fed thinks that's uncomfortably too high, and the Fed will continue to raise interest rates until this headline figure comes down. So with that said, let's talk about what the sentiment around the food crisis has been as of late. So we see a lot of bearish headlines from The Economist, the coming food catastrophe. National Geographic, the global food crisis looms as fertilizer supplies dwindle. So as you can see, a lot of very negative headlines when it comes to the food crisis situation, and rightfully so, because consumers are feeling the pinch. We see eggs up 32%, poultry up 16.6%, milk up 16%, fats and oils up 17%. And this has made Americans feel that their grocery bill is taking an uncomfortable allocation of their paycheck. And here's what's the effect. The effect is that people, they're taking fewer trips to the grocery store. They're shopping generic brands. They're entertaining at home instead of going out. They're buying in bulk. And this is a statistic that you should know if you want to understand the health of the US consumer. Back in 2020, US consumers spent about 8.6% of their disposable personal income on food. But because of the food price inflation that we've seen over the last 18 months, as you can see here, I can guarantee you that this percentage has gone up. And that means consumers are feeling the pinch. So what is driving the increase in food prices? Now, if you've been studying this area closely, you would know that it's fertilizer. It's fertilizer because it makes up such a big component of the costs to produce corn and wheat. And fertilizer is also crucial for crops because fertilizers increase crop yields by 40 to 50%. So here's the conclusion that you want to know. The conclusion is this, that if fertilizer prices are higher, farmers, their production costs are higher, and therefore this results in higher inflation. Now, if farmers don't use as much fertilizer, then crop yields fall, and there will be less supply, and this also results in higher inflation. So what you and I want to see together as a community is that we want to see lower fertilizer prices, because this will result in lower inflation. Now, will this hurt companies like CF Industries or Mosaic, the companies that produce fertilizer? Yes, it will hurt them, but it's better off for the general consumer if fertilizer companies are not being able to price gouge due to the high prices in this market. So here's the situation that we have. Russia is the #1 exporter of fertilizers, and Belarus, where the Ukrainian invasion was launched, is #6. And together they make up about 18% of global fertilizer exports. And because Russia and Ukraine are still in the midst of war, Russia is having a lot of difficulty exporting fertilizer and wheat from the Black Sea to the rest of the world, and that's causing the disruption that we're seeing today in food prices. You add this together, and it looks like that falling crop yields is something that is likely to happen in the foreseeable future. Now, on top of higher fertilizer prices and higher food prices, the impact beyond having consumers feel the pinch is that in developing regions like the Middle East and North Africa, there is a food security issue. There's warnings of riots, famine, and mass migration, and all of this migration might enter Europe. And that may potentially overwhelm the local economy in Europe if that happens. Now, not all is bad, and there are a lot of bright spots emerging, and we're going to talk about that after we have a word from our sponsor today, FTX US. Now, as we all know, the crypto industry has been greatly under pressure, with Bitcoin having declined over 60% from its peak. Major crypto platforms have fallen into a liquidity crunch, with the market currently trying to find its balance. Now, FTX has stepped up during this period of time by aiding other crypto platforms with financing. The company stayed lean during the crypto boom cycle, having only hired 300 staff, and is now more able to weather the current storm. The latest development was mentioned in Fortune magazine here, that crypto lending platform BlockFi announced it had signed a term sheet with FTX to secure a $250 million revolving line of credit. And this followed a statement which revealed that Alameda Research, a quant trading shop founded by Bankman-Fried, had offered crypto broker Voyager Digital a revolving line of credit. And Voyager Digital said it had taken the credit line considering the current crypto market conditions. In other words, FTX has come out and has emerged as a bright spot at a time of great uncertainty in the crypto industry. So they're showing incredible levels of leadership, and that is just amazing. Now let's talk about the features that FTX has to offer. FTX recently launched stock trading features on its app, and on top of stock trading, FTX also has a complete crypto and finance app that allows users to buy crypto assets and NFTs with no fees. Dollar cost averaging is a built-in function on the app which allows users to buy chunks of crypto over time. One of my other favorite parts of the app is that the fees on this exchange are much lower than the other ones out in the market, and no minimum fixed fees on transactions. You can use the FTX app to buy your favorite NFTs with no gas fees, and also up to 85% lower fees than other top exchanges. For my friends here on YouTube, FTX is giving all my users who use the code LarryChung to get free crypto on every trade over $10, but you have to use my specific link below to download the FTX app, and just downloading the free app supports my investment research published here on YouTube. So as always, thank you in advance for your support. Now, let's get back to the video. A new narrative is emerging, and it's that recession fears will bring down commodity prices. We're seeing headlines such as global food inflation gets reprieve as wheat and oil seeds tumble. And we're seeing agricultural futures fall from the highs across palm oil, wheat, corn, and soy. And this, in my opinion, is a very positive development for the future inflation CPI prints coming out later this year. Now, here are some factors that cause food prices to fluctuate, and this is something that may be helpful for you to know. Economic expectations factor into food prices, whether we're entering a growth stage or a slowdown. We also have to keep in mind rival producers being more aggressive with their exports, We have to analyze crop yields and fertilizer prices, and we also have to study weather and seasonality trends as well, because unexpected days of really hot and cold weather can impact crop yields. So with fertilizer prices now so high, the stockpiles are starting to swell, and that's easing the harvest worries. And as a result of this, we are starting to see fertilizer prices come down from earlier this year. And in my opinion, this is one of the most important charts to track if you want to understand the 14% weighting of food inside the CPI index, because fertilizer plays such an enormous part of operating costs when it comes to farming, and therefore fertilizers and their prices can help us understand this specific component of the CPI index. So this is a positive development in my opinion, in that fertilizer prices are a leading indicator into future inflation prints. So as we head into harvest season in this coming September, we can see in this chart here, if I actually zoom in, you can see that during the months of May, June, and July, which is where we are now, this is the growing period of the crops that farmers harvest later this year. And a lot of that is harvested in September, as you can see here from this chart. So the dark black lines indicate the growing period, the light black lines indicate the harvest period. So where fertilizer prices were in May, June now, and July next month will determine how expensive the farming costs will be once they harvest in September. So if we can see fertilizer prices come down from here, it is possible that we see food prices start to tame down later this year, and that's hopefully what all of us want to see. Now, on top of this, we have to monitor diesel, because diesel makes up 15% of a farm's expenses as well. So we have fertilizer and we have diesel. And together, these two commodities are going to be powerful leading indicators to where inflation is going to go from here. The astronomical price of diesel is making everything more expensive. So if we can see the price of diesel level out, that's going to be very constructive for the peak inflation story. I'm monitoring that on a daily basis. Now I want to take your attention to this chart here. And that's because recently, President Biden talked about removing federal taxes on gas. And that's huge, because we can see for regular gasoline and for diesel that could shave off about 10% of the cost to fill up your tank. And for consumers that are spending more and more of their income on food and more of their income on gas, this is certainly a welcoming development. So this is excellent in my opinion. And I believe that this development is going to help diesel fuel level off from its current levels, which is at an all-time high. So now let's understand the food shortage crisis with company level analysis, with equity research. And we're going to do this by understanding one of the biggest players in the grocery store market in the US, and that's going to be Kroger. Because I've talked about Walmart and I've talked about Costco previously quite extensively, so I want to bring this analysis into Kroger's point of view. Now, Kroger is estimated to have 10% of the grocery market share, and Kroger has an excellent understanding of how consumers are thinking about inflation. And according to their latest earnings transcript, Kroger indicated that inflation has people thinking about their eating habits. And on top of this, Kroger believes that inflation is going to be at heightened levels for the remainder of the year. So the result of this, the conclusion that they have, is that the typical basket size for a customer continues to decline, and that doesn't bode well for US consumers. So if we can have fertilizer prices decline, if we can have diesel prices decline, we're also going to see food prices start to level off, and that will improve the outlook for Kroger. But as of the latest quarter, which ended just a couple weeks ago, their outlook for the consumer is one where they view people are shopping less at their stores. So here's a summary of my observation and research. The longer the Russia-Ukraine crisis endures, the longer the runway the commodities market will have to make a rebound, because uncertainty will keep supply tight and demand will remain high. Now, fertilizer and food prices near levels that caused them to experience demand destruction, meaning farmers were not buying fertilizers anymore because it was simply too expensive. But the truth is, these materials are so essential that they do have a floor to their prices, even during a correction. So they could stay elevated. Now, the US largest grocery stores are indicating that their margins are shrinking, and at the same time, consumers are having smaller grocery bills at the stores. People are eating less, going to the grocery store less frequently. So it will take a combination of falling diesel, fertilizer, and food prices to structurally change the inflation story. So if you want to follow where food prices are going and you want to accurately understand where inflation is going, follow diesel, follow fertilizer, and follow the major food components that make up the agricultural index. Now I want to talk about what we've been doing inside our community, how we've been leveraging this macro research into our investment strategy. First of all, we've stayed bullish on China, as I've discussed on my channel publicly and in my public newsletters and also privately as well, especially with Alibaba in that 98 to 103 range. We advocated for risk addition at the 3550, 3650 level on the S&P 500, and we're going to talk about what comes next inside Patreon. So let me give you a quick recap. Before the June FOMC, before that important Fed meeting, we talked about how there could potentially be a drawdown to that 3550, 3650 region. This was discussed on June 15th, before the June FOMC. And we talked about if that range materialized, we could see another bear market rally that could bring us to that 3850, 4,000 level. This was discussed all before the June FOMC. Now, my conclusion after the June FOMC was that Powell was indeed very hawkish. And because of that, I alerted our community to make sure that if they were very aggressively positioned, to ensure that they were doing risk reduction, if that they were in margin, to use that rally to reduce margin. That's what we discussed. That's what we discussed because the day after FOMC, as you probably remember, was brutal. We went from that 3,800 level to that 3,650 level. And I told our members that that was an opportunity. I told our members that that was a buying range where if you had buying power, that was the moment where you do a little bit of risk addition. So on top of this, we continue to advocate for Alibaba at 98 to 103. There were moments in time where if you follow the name closely, you see Alibaba go from 100 to 110 back to 100, 100 to 115 back to 100. And every single time that Alibaba re-entered that 98, 103 range, we defended it, advocated it, talked about how it would once again be an opportunity. And a lot of people took advantage of that. I talked about this on Twitter. People very happy about this opinion. And after the FOMC sell-off, we discussed that 3650 region being a decent buy level for traders. As you can see here, a lot of people were very scared at the time. Headlines were very scary. Sentiment was very negative on YouTube. Sentiment was very negative on Twitter. But we discussed inside our community that this was the moment where if you're going to add risk, this is the time. So we reiterated that we could revisit that 3850, 3900 range soon. And that's exactly what we're seeing today. Now, I gave this as a preview in my public emails that I send out during the long Juneteenth weekend in the US. I gave my public email list. You guys, if you're on my email list, you would know that a bear market rally was coming. So I basically gave really powerful guidance to you guys before this bear market rally really materialized. So if you're not on my email list already, make sure to be on my email list. I send out a high quality email once or twice a week. So you can see here that since the end of March, we've gotten a lot of people onto my email list, and I'm really happy to be able to help you guys. The market will present generational buying opportunities when all is said and done, but very few people will be able to take advantage of it because very few people have the patience that is required to take advantage of this market. And look, I really want to help you first survive, then navigate the crisis, and then finally find opportunities at the right time. Let me take a moment to show you something that I sent in our private community here. So we can see that today, the S&P 500 re-entered that 3850, 4,000 range that I've been calling for. Alibaba north of 115. Meta showing us that a little bit of patience pays off. Micron doing not bad either. And here's the thing. A lot of people are very happy about this, but the truth of the matter is our work is not finished because we still are in a bear market, and I will do whatever I can to help our people to navigate the upcoming pivots in the market. I can tell you that if you're not doing your homework, that the July FOMC will once again get you off guard. So please don't get off guard. Please do your homework. And I'm just going to say this one last thing, and then we're going to wrap it up. Make no mistake, we are in a bear market, and bear market bounces can be very seductive. Find a mentor or a strategist to upgrade your skills. It can be me or it can be others, but no matter what you do, seek help. Do not do this on your own, okay? The people who tell you to do this on your own, they are misleading you. This is a tremendous time for learning and taking advantage of markets to grow your skills. So whatever you do, do not waste this moment and do not do this on your own. And if you want my help, you have no idea how committed I am to helping my community, and I wish you all the best, okay? So with that said, make sure you follow me on Twitter, follow me on my public email list, and I want to thank our sponsor today, FTX US again. If you enjoyed the research here and any of this information is helpful to you, smash that like button, turn on the bell. Much love, guys, as always. And I will do whatever I can to help you navigate this crazy market. And I will see you in my next video.